From magic internet money to it's only used by criminals, Bitcoin sparked a lot of attention and controversy in its only 11-year history. In this short 2-episode series, we will cover its technical and economical aspects, so that at the end, you will be able to have your own opinion on what Bitcoin really is. Amid surveillance, privacy and censorship topics, Bitcoin is proposing a fully transparent, non-confiscatable and censorship-resistant asset. Let's have a closer look at its economic and social implications. Inflation itself is not necessarily a bad thing since it provides liquidity to the market. High inflation, on the other hand, has a negative impact on a country's economic and social level. The price is more often than not paid by the ordinary people. Bitcoin came up with a totally new, transparent way of issuing money. New coins are regularly introduced to the market, following a predefined schedule. The first big dissimilarity of Bitcoin to traditional currency is that the Bitcoin supply is capped at 21 million coins. This means that there will never be more than 21 million coins in circulation. In reality, the number is way smaller. While the exact amount is difficult to calculate, it's estimated that around 3 million Bitcoins are actually out of circulation because of lost private keys, making it even more scarce. To put things into perspective, there are around 40 million millionaires in the world, and it's impossible for each of them to own one Bitcoin. The number itself is actually not that relevant. What is important is the total market cap, the number of coins multiplied by price. In addition, comparing Bitcoin against another coin from a price perspective is not helpful. What is to be compared are the total market caps of the two. As we already explained in our previous video, new coins are introduced to the market via a process called mining, which is at the same time keeping the network secure. Since this system implies that new coins are issued, inflation still exists. But, unlike traditional currencies, the amount of new coins is halved every 210,000 blocks, which is roughly every 4 years. This means that inflation actually decreases over time. The process itself is called halving, and the next one will happen in the beginning of May 2020. May 2020 represents also another milestone. From this point on, the Bitcoin inflation rate is dropping under the standard 2%, which is usually the target inflation for the Western European countries. So, although Bitcoin is not a deflationary system, because inflation still exists, it is from a technical point of view moving towards this direction. Bitcoin is currently undertaking a price discovery phase, which involves a high degree of volatility. In a span of 4 years, the price skyrocketed from $400 up to $20,000, then fell to as low as $3,600. Such volatility is possible also because the total Bitcoin's market cap of around $180 billion as of February 2020 is relatively small compared to other assets. Gold, for example, has a market cap of $8 trillion, which is roughly 45 times bigger. As a result, the price can be easily modified with a relatively small volume of transactions. But why is the price discovery taking so long? Well, because the values Bitcoin brings forward are ones that the humankind never really had before when it came to money, and now the market is trying to put a price on them. How much is it worth when a transaction can be rejected by anyone? How much is it worth when a stored value is borderless and non-confiscatable? As long as these questions remain unanswered, the volatility is here to stay. According to financial analysts, Bitcoin's price will most likely stabilize in 5-10 years from now. This does not necessarily mean it will increase. People not trusting the values behind Bitcoin, a flaw in the blockchain protocol, or the chain being successfully hacked can stabilize the price at $0. On the other hand, Mass adoption, a cold war on Bitcoin, or Bitcoin being used as a government-independent asset might easily send the price to over 1 million US dollars. But how can an asset with such a high volatility be a store of value? The store of value is not necessarily dependent on volatility, although it may look like it. To understand this, let's have a look at one of the most powerful currencies in the world, the US dollar. It's safe to say that there is no volatility associated with it. However, during the last 100 years, it has lost around 95% of its purchasing power. And let's not forget how this value applies for one of the most successful currencies in the world. For the vast majority, the percentages are way less optimistic. We're keeping this channel and our content as objective as possible, so the answer is up to you. Bitcoin transaction fees are significantly lower than the ones a bank requires. For example, in September 2019, a Bitcoin transaction worth 1 billion US dollars was performed for a fee as low as $700. That's $0.7 per $1 million. An interesting fact about Bitcoin fees is that the user controls how much to spend for his transaction. One can choose to increase or decrease the fee, which will have increasing or decreasing the priority of his transaction as a result. Cash has a lot of flaws, but comes with a big advantage over other forms of money like commodities or commercial bank money. It's available to everyone. On the other hand, banking services aren't. It's estimated that around 2 billion people on the planet don't have access to banking services today, and the way how financial exclusion translates into poverty is a known fact. An issue with cash is, however, its availability only in a local form. Not being able to trade or offer services in a broader way can only lead to even more poverty. Bitcoin comes up with a completely open system for everyone, without any KYC needed. This is providing opportunities that can help millions escape poverty. This openness of Bitcoin might indeed facilitate illegal services. The infamous Silk Road market is an example in this direction. But is it really opening a door to it? Wasn't this door always open for a specific category of people? Illegal activities can and will go on happening independent on the form of money used, be it cash, gold or oil, from the small players in the market to the top management bankers. Let us know in the comment section below what your opinion on this topic is. Bitcoin is a disinflationary monetary system, slowly moving towards a deflationary system. It is kept at 21 million coins, and issuing the coins is completely transparent. In addition, Bitcoin cannot be confiscated and is censorship resistant. All this considered, Bitcoin is, before becoming a currency or a store of value, a store of truth.